Hello everyone, good to see you all today. Welcome to the PivotBoss Monthly Market Outlook for September 2020. That came fast here. The month of August, we just did the recent monthly market outlook. It was a little bit later than usual, second week of August, but what we talked about was the strength that we could see in August compared to typical seasonality. And we'll discuss seasonality as well right now with regards to what to expect in September. But first, I want to welcome everyone. Thank you all for joining me here today. You should be able to hear my voice now. You should be able to see my screen. And right now we are using the Zoom webinar here. This is the first time that I'm hosting with Zoom webinar, so hopefully everything goes well. And I'm already seeing some flow come through. Thank you so much for joining me. Again, my name is Frank Ochoa. I am the author of the book Secrets of a Pivot Boss, and I run the PivotBoss Premium Trading Room as well. We also have fantastic training at PivotBoss Masters and other training at PivotBoss.com as well. Our new EchoFin 2.0 trading room is now live. We migrated last week to the new 2.0 room, so now we are operating the trading room out of PivotBoss.echofin.com, so please be sure to check that out. But I do want to go ahead and get started with the webinar here. And first, again, always like to take a look at the ES from the very beginning, but what we're going to be doing here is looking at seasonality of several different futures contracts. We're also going to look at some of the stocks that we talked about last month and how some of them did, and we're also going to take a look at some opportunities here for the month and months ahead. So we got a great schedule here on the lineup here, including some industry group rotation talk, and we'll get started right now. All right, so taking a look here at the ES in the higher time frame, what you'll see is just incredible strength. Incredible strength out of this market, just tremendous here, and for the most part it is breathtaking how incredible this bounce has been. One of the things that we talked about recently was this impulse sell-off right here, and how the sell-off from that high into this low right here provided a really good impulsive move back to the midpoint, and that gave us a key range. Key range analysis is so important here, where you have the high and the low of an impulse move followed by the midpoint, and from there we get great levels to work off of, and we also get great targets as well. And one of the things we talked about was, based off of this range here, we could be looking at a continuation into 33.85 and 35.38, and today we got the 35.38 and that final target here. And I know many of you asked about where those two targets came from when I gave them out a couple of months back, and it was all based on this impulse sell-off over a 5-day range. That high, then you get the drop over 5 days, and you found a strong pivot low, and it bounced back to that midpoint. That gave us this key range, and it also gave us these targets. I also mentioned if price were to drop below the key range, that would be the best opportunity to trap for a continuation, but never got that low, but that's okay. We had pullback opportunities throughout. We had compression here we talked about recently, the 10 to 13 day compression phase we saw in the ES. That helped fuel the recent move into the last target. So tremendous movement here out of the ES. But again, it is time to start thinking about defensive plays here, or protecting profits, perhaps even rotating from very, very bullish stocks and taking partial profits in those and putting those to work into undervalued opportunities right now. We'll talk more about that. Again, one of the things that we mentioned last month was seasonality, and so when it comes to August seasonality, last year was the blueprint for August weakness. I always talk about the August pullback that can happen, and it could give us a strong low, and then you can work off that low into the end of the year. October can provide a higher low, and if you look back at last year, it's exactly what happened. Here's the August pullback, strong low that we worked off of the rest of the year, and then October gave us a higher low here to work off of as well. That was standard August seasonality with end of year continuation. This is not a standard year, as you can clearly see by the chart here. Not a standard year by any means. As a matter of fact, the most unique year probably from many measures. And what's happened this time around, again, we have COVID-19 here permeating throughout. We have a significant comeback led by tech, especially. But one of the things is, in an election year cycle, you tend to see August be an up month. And again, credit to one of our traders in our trading room, JP here, who first pointed that out a few weeks back as we talked about seasonality. And one of the things I went back to was researching back to the year 2000. In an election year, the S&P 500 tends to be up 1.3%. Let's see, 1.73% rather. So it tends to be up 1.73% in the over the course of the month. And you can see this was perhaps the strongest August on record here. So tremendous strength. You can add this year to the list here of bullish election year Augusts. Now with this move here, there tends to be a counter move that comes in September, and that counter move can tend to be bigger than the 1.73% move up. If it's averaging 1.73 up, the counter move here in September tends to be down 2.2%. 2.2% in an election year. And as a matter of fact, that was being pointed out right after the close here when they were interviewing Novogratz on the television, and he says, I'd be looking for a pullback over the next couple of weeks here. Middle of September, there may be a pullback to come. So just things to consider with regards to seasonality. They're not always perfect seasonality, but it gives us a very good basis to work off of. And the other thing I'll mention is, again, it's very difficult to sell this market, right? I'm not selling the market. You're looking to buy dips, buy pullbacks. But there are ways to start to hedge, because if a swing comes, it will be fast, and perhaps in the first day of the pullback, we might be back to 3,400 to 3,385, something we talked about in the trading room this afternoon. That's the entire tiny portion of this range right here. That's the volume profile there, and you can see there's a volume ledge right there, and that's probably where we pull back to if we get a pullback soon, right? Boom, slam down into that point. And then from there, perhaps it bounces again and continues higher. But a failure there would open up the previous month's low, and that would basically take out the August low. So this is the previous month's high, this is the previous month's low, and that's the previous month's midpoint, and it coincides very nicely with market structure there. So 3385 is going to be very important. And if we get a pullback, it could be a 1 or 2 day move into that zone, very similar to this over here. So again, I'm not eager to sell this market, and because this market's super strong, very bullish. You don't want to get run over by the train, but at some point here, it makes sense to start looking for hedges, looking to take some profits, because the market does not go to the moon, right? At some point, gravity takes hold. And when gravity does take hold, will it be just a normal pullback and go, or do we get the bigger pullback, right? Normally, you can get, in a bullish market, you get that pullback to the mid and then you go. If you fail there, then you come back to the low. But what happens if you don't hold the low? That's where you start to really stretch it, and the 200-day is 30.85 down below, and that makes a lot of sense as well, as this is also very thinly traded compared to all that down here. So just some levels to consider here. It's been a very strong market, but the thing to take away from the ES right here is that it averages minus 2.2% in the month of September since the year 2000 during election years. So that's 2000, that's 04, 08, that's 12, and 16. So just something to consider here. Now, if we take a look at the NQ, the NQ has been tremendous. It has far exceeded anything that we've seen happen in tech like this. Even the 2000s .com bubble is completely different, but very similar in many respects, in that it is just shooting higher at a pace that hasn't been seen perhaps ever. And again, at some point, it may fall back to gravity. And it tends to happen perhaps during this month. So in terms of this one, we've reached our targets as well. We got there today. It's uncanny. You have this key range right here. Strong low, strong high, pull back to the mid, and we had two targets, 11.7 and 12.4. On this day right here, we had a bullish outside day right there, and that afternoon and also the next pre-market day, in the pre-market video I said, if it hits 10.7, there's a good shot to get a plus 1,000 into this 11.7. And it did it almost to the penny here. The low that day was 10,691. So it went 9 points below the 10,700 and never touched it again, hitting not only the 1,000-point target, but then reaching up and grabbing the 12.4 as well. So today, hitting that final target up here, and now we need another swing move. We need another pullback that's going to get us a good key range that we can then work off of for new targets and new key levels to trade off of. So again, this market is just running away. It's super, super bullish. But during this month, it'll be very interesting to see if we start to see a little bit of a pullback. And if so, how far or how deep. Again, it's safe to drop into 11.5 and still continue higher, or drop into 11.5 and maybe just build a range as we head into the November election in the US. So that's another thing to consider. This is an election year for the US, and a market can tend to pull back in September ahead of the election. Again, we don't know the magnitude here of what may be seen this time around, but its average is 2.2%. And then following that, we may see some compression heading into November, right? The first week of November, we will have the election there, and that's not too far away. So we may see a pullback this month, followed by range-bound action as we head into the rest of the year. So again, one thing to keep in mind here is that this market remains very strong, so I really need to see evidence. I really need to see evidence of rejection before selling any market here. But very, very strong movement, incredible movement to our targets. What I love about our style of analysis is that it's very simple and also replicable by you at home, right? This strong low to that strong high, and then a pullback to the middle of that range, and it gave us every key level that we needed to know in order to work on this and find directional conviction and get to those targets, right? So everything we needed was all from those 3 points. Bing, 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 and now we have our levels and ready to go. So incredible movement, but again, at some point, perhaps over the next 1 or 2 weeks, we may begin to see a correction of some magnitude. How much remains to be seen, but perhaps 11.5 might be in play. Now, let's talk about gold. Got a few more futures markets I wanted to discuss, and also, if you have anything you want me to take a look at, you can type it up in the question and answer box, the Q&A. If you don't see it, you can pop it up there. And hey, good to see you, Ramesh. Love from India. Love it. Love it. Thanks so much for all of you that log in from wherever you are in the world. It's incredible to see all the countries that are represented when I get on a webinar or when my YouTube videos are viewed. Is just incredible to see the support from around the world. So thank you for joining. Right here, Again, if you want any stocks or any market that you want me to take a look at, please type it in there and I'll get to it as I can. Over here, GC is kind of what I'm talking about with regards to the NQ, when we might be too high and we might pull back to the mid and then form a range. This is exactly it. It's just happened. We just exploded to the upside, and then here's the impulse sell-off, and it went right to the previous month's midpoint. That's it right there, and then it bounces, and now it's building energy for the next move. That could be exactly what the NQ looks like over the next month. You get a pullback, bounce back to the mid, get ourselves a key range, and now we have very good boundaries to work off of. So from that impulsive high here to that low, those are the key levels. You have this midpoint that's very important. And now we know that if price were to drop here between 1830 and 1875, it could be a great trap down here. A bear trap where you trap below the low and then it squeezes back up toward recent highs, the mid, and then perhaps the highs. If this gold market's going to remain hot, it may not ever come back to this low, just like the ES. Remember, the ES formed that range and it never came back to the low. Instead, it formed higher here, and eventually we're up here at the 150% target, right? So up here are the two targets. That's 2304 and 2196. So those are the next two major targets for gold. We have energy being built up here over the last few weeks. If price can continue to hold the LVN in here, it's hard not to see gold trying to make a move into these upper targets. So just something to consider there as well with gold. It's been phenomenal. So if I go back to the NQ for a moment, just to connect the idea, big huge move here. We may see a 4 or 5 day pullback that brings us back to 11.5. We bounce back to the midpoint of that range, and then we build out some energy here. That could be a way we see this market play out over the course of the month. So here is GC, same thing, very strong, boom, pullback and range. Now keep in mind, this one has already reached our targets earlier. This was the key range from before, and I mentioned we had targets at 1831 here and also at the 1957s, and again we gave that target back here when price hit the zone. Amazing move to get up to there, but then we surpassed it as well. So you can see I added the 150% target up above. This is measuring 200 from the midpoint, but from the range extension it's 150%, and it hit that target as well. Just tremendous movement out of this one, but this one's compressing for the next move, and the upside targets here are going to be 2200 and 2300. So that's what's up above here. Again, any test as deep as 1830 could still be a great buy for a move into those targets, and it may take a while. You know, it's not going to be a quick move. It could take to the end of the year to get to those targets, but those targets are clearly in view here. With this energy, it could certainly get there. So keeping an eye on gold as it continues to build out within this key range. Another one here, market that I wanted to talk about is CL today. Incredible selling pressure in CL. CL was down 2.76%. Today's ADR was 200% of average. So let's zoom in here. This right here is the PivotBoss Advanced ADR Indicator. I created it to measure range, price range, and measure it over a user-defined number of periods. So you can look at a 1-day range, you can look at a 2-day range, a 10, a 20-day range, whatever you want to user-define. And one of the things we noticed here was how price had compressed. So the pre-market report this morning mentioned this compression looked just like this compression. And what followed was this move. Huge high range day, major move. So anytime it's blue bar here, that means it's over 125% of average range. In this case, that was way more than that. Over here, same deal. And look at the same move that happened right there. The same drop. And then we got a extreme reversal back up. This big drop down, there could be another extreme reversal back up to come. Now we may need to flush a little bit more, maybe take out yesterday or today's low, trap and go. And for those of you that want to play an intraday play or a play just for tomorrow, it would be a trap and a return back to today's midpoint. So if you like that idea, there could be a trap anywhere below today's close and into the previous low, a trap here, and then you return it right here to this golden dot. That's 42.22. That's the midpoint of today's range. So typically speaking, if this is going to be the extreme reversal, whereby you stretch the rubber band this way, let go of this end, and it snaps back the other way, just like this. You stretch the rubber band, you let go of one end, and it snaps back the other end. We could be looking at a play that does that soon, but tomorrow it could just be a quick move back to the midpoint of that range. If we do fail to hold, or if we fail to hold the previous low and then can't get back above it, then the previous month's low is in play. That's 39.60 here, 39.58 to be exact, and that's the previous month's low right there. Now, one thing to keep in mind is this market is honoring the FOMC key level from July 29th. So the FOMC key level is right there, and coincidentally that was the day before the major breakdown and return. So that key level right there, you can see once you sold off away from it and found rejection, you came and snapped back right to it. Once you take it bid here, it goes higher until it rejects, and then it comes back to it. And now here it is again coming into play today within 3 ticks of that level. Incredible. Or got 3 ticks below it. So one other thing I want to mention here about ADR, whenever you get over 200% of ADR, really over 150 or 175 on the low end, but really if you get over 200% of ADR in one day, you tend to see high volatility days that follow over the next 1 to 2 weeks. So this is probably just day one of high range action, because we may see another big range tomorrow, another one the day after, and then we might see some follow through after the holiday weekend as well. So just something to consider with that one. This is usually very, very accurate when it comes to that. For example, big high range day here, and then look at the high range days that followed. Same thing here, high range day, and look at the big days that followed here. High range day there, and these 4 days were huge. That could be similar here coming up pretty soon. Now overall, one thing I did want to mention with regards to crude oil in terms of seasonality, let's go over here and look at seasonality right there. And then what I'm going to do over here is show as a percent. The scale is not as easy to read right here. Actually, yeah, I guess it's better with percent. Right here, we're right there. So if we draw this line straight up, we're right there. Again, this was a big pullback today, right? As we saw on any of those other ones, every time you had a big pullback, it bounced, then it had a big pullback and it bounced, and it had a big pullback and it bounced. Here's a big pullback. Will it bounce again? According to seasonality here, look at the move that tends to happen into October, right? October's about right there. This move tends to be up, and the percentage tends to be pretty decent. You know, that's a good 3 or 4%, maybe as much as 5% move, and that's just to the middle of, to the beginning of October. You can see here if you take it out, you know, a week into it, that's where you top out right there, and that's, you know, pretty significant move. So in terms of crude oil here, we have the potential to see an uptrending market here over the next 4 to 5 weeks into the first week of October, based on seasonality. And this seasonality trend is a 5-year. Okay, if we want to bring this out, say, to a 10-year, we'll see what that looks like. And again, the farther you go out in seasonality, depending on the market, things may change. Over here, from a 10-year perspective, not quite as clean. This one goes up a bit here, but that starts to fizzle out in about the 3rd week of September. So that's a good 3 weeks of strength versus 5 weeks of strength. Now, keep in mind, crude oil, much different market right now than 10 years ago, but still pretty solid nonetheless here. So I just wanted to share that as well with regards to seasonality with crude oil. And one last thing for crude oil, I'm going to bring this up to a 20-day range, or maybe let's go 21-day to make it like a monthly here. If you look at this on a 21-day, today it compressed right there. You see that little magenta line right there, or bar? That right there is compression, and suggests that the 21-day range, the current 21-day range, is the smallest we've seen. It doesn't suggest it, it shows it. It's the smallest we've seen in months. There it is, that's the range, and look at this. I mean, you have to go way back in time to find something even similar to that. And one of the times is right here at the beginning of February, where we had a narrow range here, and then look at the expansion. Obviously, this is just a different market at the time, but I mean, that's the type of thing we're looking at here. This compression suggests that at least, the very least, if we get movement soon, we may get 5.5 points of range expansion, or at least total movement. Say this is the low right here, which it may not be, right? We might go a little bit lower tomorrow and then form a stronger low. But say this is the low, or just call it 41 even to make it even, and you go up 5.5 points, that's 46.5, and that's going to be about right there. Actually, that's not right there, that's 45.5. 46.5, a little bit higher. 46.5 would be here, and that's from a 41. You add 5.5 points, that's 46.5. Now, when you combine that with this key range, high to low and the midpoint, lots of compression over a 21-day span. If it can break through these highs here, you got a move into the 50% target up above, and that's 45.92, which would coincide with that 5.5 reading there. So that could be about what we get here pretty soon. I think if we have a shot to rally here, and again, this may not be the low, but it's probably close, right? Sometimes it is the low, like this one, but sometimes when it closes near the lows like that, we might need to flush first and then get going. So we might need a flush a little bit lower tomorrow and then see what happens here, and if it can do this type of thing in the 46 by the first week of October. So that's a blueprint here that we can look for crude oil over the next 5 weeks. If 41s can't hold, then there will be a flush down to the recent pivot low, and that takes you down to the key range low here of 38.72. So some things to consider here for crude oil. All right, now I did also want to talk about RTY. RTY is one that if you want a hedge into the end of the year, this might be one to consider. We have a key range right now that's developed here. Key range low, key range high. And the Russell 2000 has traded completely above that range in a narrow range as well. If you look down here, it's actually right at 65% of ADR, so it probably should be magenta there. And it's a 21-day range. So just like crude oil, this is super, super compressed over the last month. It's compressed against quite a bit of the range that we've seen historically speaking as well, right? And it's very reminiscent of how compressed it was here, right, just before it dropped. It had all this compression that built out in here, and then boom, big move. Again, I'm not thinking that we're going to go boom back down to 1,000, But if we do break, when you have this kind of range here that's developed above a key range high like that, this is a potential bull trap where they're trapping late longs up here, and if these longs don't get paid, then the stops may start coming out. You may see price breakdown through 1550, and then that will open up a quick return back toward 1362 or 1350 to 1362. So that could be a really high quality target, but it really needs to take out 1550, right? If you can get 1550 or take out this low here, which is exactly at the key range high. Let me zoom in a little bit for you right there. That low right there is 41.30. This level right here, that high is 40.3. So really you got to take out 1540. So if it takes out 1540, there's a shot to get a move all the way to 1360 with a great target at 1460 midway. Now, when would you enter this trade, or how would you play it? If this is a hedge against what could be some fall volatility here or fall selling pressure of some sort, it would be, I would go out to December. So December's over here. So even if we do, take a bit to go, you can offset a little bit of that time decay, and then perhaps we get some move that may do this at some point, right? But if you go out to December expiration, you have time to let this thing try to work its way down. So this is one to consider here if you want to hedge your bets a bit. The other thing I would look for right now, here's the previous month's high. This is a major LVN above it at 1620. We may need to test into that zone, and if we reject this area hard, that might get us going for a test at 1540, and that might open up a violation that gets us down into those lower targets of 1460 and 1360. So that might be a catalyst that sends this thing down, is breaking through the high 1920 level. So keep an eye on that. Again, this is similar to what happened in the ES ahead of the Q4 2018 sell-off. So if you go back over here, this is the exact same pattern. You have that key range high, you have that key range low, and here's the box. I got short on that day here, and there's the break. That's kind of like that 1540, and then you got the move to the midpoint there, and then eventually this one caught the low as well of the key range. This is the exact same setup we're seeing right now in RTY. Again, there's never a guarantee that it will happen the same way, but it's the same type of setup, and if 1540 gives out, it could be a pretty quick reversal ahead for this one. And if you like this idea, IWM would be a great vehicle there to use as an ETF. You can do a put spread, or however you like to organize that strategy using IWM. All right, let's talk some stocks now. Did quite a bit on futures there. One of the things that the very first stock, or one of the first stocks we talked about last week, or last month rather, was Tdoc. I had mentioned that I was long this one. This was the, when was it? It was this day right here, I believe, that we were in. So that's 810. So I got long this one here by a put spread. I sold the 210, 205 put spread with 9 days to expiration, or 10 days to expiration that day, remember? And we were looking for a snapback to this midpoint. So we've talked a lot about key ranges right now, right? Everything we've done right now, the analysis has been off of key ranges. And a key range develops on an impulse move with a strong top and a strong bottom, and then a pretty swift pullback to the midpoint of that range. So when you had the strong top here and it started to sell off, started to sell off, started to sell off, you're waiting for a strong low to develop. In this case, that was my strong low Q. You had the signal right there, looked like a strong low. I got in at the close of that day. Unfortunately, this thing gaps down the next day and tests a little bit lower until finding that strong low. And once it found that low, it snapped back to the midpoint of that range. So I sold the 210 because I thought it would hit 217. And once it did and closed above, You know, I took that off for a max profit that morning, I guess, right here. When it rallied up to here early in the morning, it filled the order and done for the trade on that one. So again, that's a very, very good trade setup there that I love. Is an impulse sell-off. You find a strong low and you snap it back to the midpoint. And you can see right now, since then, it's been sideways. So this is one of the ones we talked about last week. I love it. This has been such a great stock. There's been lots of opportunities in it since the March lows and even before that as well. And it appears as if this is ready for the next big wave up. And again, if we're using this as our key range here, then we have targets that are very reliable that take us as high as 324.25. We could be looking at a move into $324 very, very soon, perhaps by the end of the year if this wanted to. So to build this energy here, just like it did over here, and then it starts making its move. So this one looks like it has a shot for longer term uptrending price action here toward 288 and 324. But it also looks like it's ready for short-term swing action as well. So if you're a swing trader or a short-term trader here, the setup that it's developed here today is very powerful, and I've seen it occur in several stocks today. I guess it was a NASDAQ thing where it took out the previous low or took out key levels and then rallied into the close. You can see that price took out the previous session's low here. A trap below those lows led to a big rally the rest of the day, and then price closed above the previous session's midpoint. A very, very strong move. And what tends to happen after that is you tend to see the breakout occur. So this is a really, really good potential mover here to the upside. In this case, if it can stay above 220 from here out, that's really good. Perhaps we need to drop as low as 217s or something like that on a pullback. So somewhere between 220 and 217, if it can hold that zone over the course of the next few days, we may start to see a move higher that can get us back above the 238, 240 zone and perhaps filling the gap at 250, and then you have upside targets up above. So this is one that is setting up for a short-term move, perhaps one to 2 weeks of strength up toward our primary target zone up here between 247 and 258, 259. But then it also has end of the year strength potential as well. So into the end of the year, this thing could still continue higher, or until it reaches these targets, right? So that's pretty solid, especially with this built up energy here. So I still like this one again, and we'll be looking to see how price reacts to 220 here tomorrow, because there could be a good opportunity there to get a short-term swing back toward the 253s or perhaps higher. So that's Tdoc. Another one we looked at last time was Lvgo. Wow, no. Lvgo. LV. Can I type it? There it is. Lvgo. Another one here is Lvgo. This was on this signal last month, and it looked just like the Tdoc signal, right? Very similar. You got this impulse sell-off, a strong low, and then boom, a nice little bounce back, just like we drew it up last month. A very, very good move. Now this one also looks like it's ready to continue higher. If you look right here, this is almost the exact pattern that we just saw right now in Tdoc. These are two trades that we just looked at last month here. They worked out well, and now they look like they're gearing up for the next move as well. So we could take this key range high to key range low here and give us upside targets. I don't really have to draw that range right now because the PivotBoss pivots are doing it for us. What I mean by that is this high right here is the high of last month's range, and it coincides with that blue line that's underneath that green line. This low is the low for last month's range, and it coincides with this blue line here, which is the low. That's the PivotBoss pivots, right? The high, the low, the close, which then helps you get the midpoint and the pivot point and the other side of the pivot range. And then from this range, you have your R25, R50, R75, and R100 PivotBoss pivots. So we can tell that from right here, we would normally draw a key range, and I would call out the 50 and 100% targets. And right now, that takes us as high as 188.65, and this one right here is 169.33. So right there and right there would be those targets. So Lvgo with another failed low in the Pima trigger zone, higher value relationship, and this is a narrow pivot range. A narrow pivot range. For those of you who have my book, Secrets of a Pivot Boss, you know that the narrow pivot range is an indication of potential expansion to come, increased range and expansion. And so this one is another good opportunity for a quick move toward that 170, and then perhaps a continuation toward 190 over the course of the next few weeks. So this one's looking pretty solid. Now, I will say, with regards to Tdoc and Lvgo, if at any point price fails to close right above below this zone, or this zone right here, that's the midpoint of the rejection. If price fails to close above that zone, this thing might be due for a bigger swing pullback. So from a short-term perspective, we want this thing to stay above 139, 140 for the most part on a closing basis over the next several days in order for a 1 to 2 week rally to occur. So that's going to be the zone to watch in case we're wrong. But this is another good opportunity here. Back to back. Now, another one we looked at last month was CDNS. This is your standard buy the dip opportunity where you have a trending market. Price pulled back into the Pima trigger zone right here, and we had it as a buy opportunity for a continuation higher. Again, it's very simple sometimes when you see the higher value relationship here and here and here, and you watch as this market just takes the stairs up. Here, walks on it, boom, here, walks on it, boom, come here, boom, come there, boom. And now we're getting a move away again on narrow pivot range. But very, very solid, and I just wanted to show again that when a market is very clearly trending higher, you have really great levels to watch right inside the Pima trigger zone and at the pivot range here that can provide a really good spot to bounce this thing and reverse it higher. Another one we talked about was Costco. Costco had, the reason I'm bringing some of these up is because when they work out nicely like this, and not all of them work out, sometimes they mess around then go, sometimes they just completely don't work. Just depends on what market cycle we're in, how things are playing out. But this one right here did really well as well. This was your extreme reversal. You had a major sell-off, extreme reversal, and bang. And today on its highest high, reaching nearly the 360 level. That's incredible. Today's high, 59.92. But look at what's happening right here, though, or what happened here. Ooh, let's grab this tool instead. Right here, look what happened. This is the similar pattern to what we just discussed in Tdoc and the Lvgo trade. So that one right there, again, it just demonstrates how powerful this thing can be when you find the right setups in the right spots. You know, uptrending market, pull back into the Pima trigger zone. That's my extreme reversal setup that I talk about in chapter 2 of my book, and the thing takes off. But right here is really where it got started. And this looks just like Tdoc and Lvgo, where you had this nice bar up. This bar was a flush bar, took people out of their trade, and then closed back up, and then watched this thing explode from there. So very, very good how this played out, but wanted to show that. Another one here that was really good last time was Yeti. And, you know, higher value relationship, boom, boom. You watch the market take the stairs up here, and this is where we had it as a long candidate last month for the monthly market outlook. It bounces higher. But look at what's happening again here. Just like Tdoc. Just like what we saw here just a moment ago in Costco. And now we're seeing it again. This looks really solid for a breakout ahead again. Notice the narrow pivot range here. The narrow pivot range says it all. That could be a major breakout ahead for a continuation to new highs. Based on ADR, we have a target range that can take us between 58 and 60.5. So that's our target range right there. So we could be looking at an easy move up to that zone right there. We're trading 53 right now, perhaps a pullback tomorrow into 52.5. Can it continue to hold 52.25 to 52.5 tomorrow? If so, we may be looking at a very good continuation ahead. So this is one of my favorite patterns here. Lots of stocks formed them today, and it tends to happen right before you see a massive continuation again. So Yeti is still another one to continue to watch. And where this one fails, again, that's the midpoint here of the previous month's range. If we have one big down day here that takes out these lows, then that may change the tide and get this thing going down. But unless that happens, we got a good shot to rally towards 60. All right, we got a great list here for those longs already. There's some more longs here as well, and then I got some short candidates in case some of you want to play some of the short ideas. This is VMW is a long candidate here. Now this is a long candidate, although the timing of which can be difficult sometimes. This is a long candidate. I think we talked about this one probably 2 months ago. A great key range and a lot of energy being built up in this key range. At some point here we may start to make a move higher. And we have an inside relationship this month. So the pivot range, the narrow pivot range this month, is inside the wider pivot range from last month. That tends to be a breakout type of setup. You can see it right here, for example. Narrow, it's inside this one, and then boom, right? That is what could be happening here soon. Today, very, very bullish the way it played out there. And heavier volume than the prior day, heavier range, not squat buy signal on this one as well. And if it can clear 150, it opens up 162 and 176 as very good upside targets. But it may take a couple of months to get there, and there's no guarantee we're going to get a breakout right away. That's why I say this one can be a little bit more difficult sometimes when you're still in the range. But having said that, today's bar is fairly significant, and it looks the part. So this is one that may get some expansion here soon, but not quite as easy a play as some of the other ones. Here is, this is CHGG, so this is Chegg. Notice a pattern here, right? The pattern is day up day yesterday, failed new low today with a signal, close above the high, so it's a bullish outside bar as well, and it may lead to a move back toward recent highs at 90. This one's been in an uptrend as well, and again, today's failed new low could lead to a big time rally. Now again, the midpoint's very important here, 76.21, very, very important. Any pullback to that zone could be an entry for perhaps continuation higher. We are inside a bit of a range, so maybe there could be some chop before it goes, but the way it looks here, it's building the energy for a move that could take us right back toward 90. This is one that was brought to our room here by one of our traders this afternoon. This is APPS, and this one too has that high range takeout of the previous session's low, followed by a tremendous recovery. And this one looks as if though it's about ready to see a massive expansion phase here, or at least one more try after this recent move. Build a little energy, failed new low today. Above 28 opens this thing up, and we might be looking at a 10-handle rally toward 38 pretty soon. So that's APPS. Draftkings. Let's talk a little Draftkings here. This one IPO'd here recently back in April and got a tremendous rally. I mean, this is right up the alley of the Robinhood traders and the younger groups of traders coming in, Draftkings coming along. And after that initial rally, it actually held and traded really, really well in here. It traded really, really well, created some great market structure and value. But today, on news, right, today I believe DraftKings had news that Michael Jordan, NBA superstar Michael Jordan, partnering up with DraftKings, and I believe taking an equity stake in the company as well. And that shot prices up big time today. And if Michael Jordan's involved here with an equity stake, I'm pretty sure they're going to want to keep it up. So this one looks like it's ready for the next phase of strength. You can see kind of a rounded bottom here. And after a breakaway day like this, do we have some juice here for the next rally, right? With the targets above, based off of this key range, we have 51.86 and 59.96 as the next upside target. So we could be looking at a $60 handle on this one. Right now we're trading $39.90. So to rally, that'd be about a 33% increase. Impulse sell-off back up, built a bunch of energy in here, rounded bottom. If we can get through these highs, right, we have a 51.86 and a 60 down the road, and perhaps more, but that looks really good right now for what could be expansion down the way. So that one is one to keep an eye on as well. And if you want a China play, Lvgo might be one to consider. This one hasn't been able to get off the mat for a long time, so I hesitate to add this in here. This is one that I've just been hands off, but then when it developed this here, I mentioned, hey, this might have a shot to go, and it just didn't. And now we have similar price action again down here, where we've built a ton of compression down here, big range, rounded bottom of sorts, and now we're sitting right at the 200-day. The 200-day has been the nemesis to this stock. Every time it gets to it, it's offered, it's offered, it's offered, offered. So we'll know pretty soon. Is it finally going to take the 200-day bid and go? Because if so, again, this is a great rounded bottom here. We have a solid, lip or rim of the pattern there to watch. A really, really sharp lower low rejection here. Great higher support. This one has the potential, if it can get over 40, to start moving back up some degree. But again, I hesitate to put this one in here because this stock here in this industry group just hadn't been the best. So just one to watch out for, again, if it can get above 40, it may open up some upside. All right, let's take a look at some shorts now. Now, with regards to shorts, again, in this market where a lot of these things have been very, very strong, and because timing of a pullback might be in question here, again, it could be any time over the next month, perhaps, or not at all. Some of these might be more actionable than others right now. But CSX is one to consider as being a bit toppy. You can see here that we have very clear resistance here that comes into play right around 80 bucks, 81 bucks there, basically between 80 and 82. It's a really good zone of resistance here, and we're not quite there yet, but we're getting close. 78.65 was the high today, the highest price since the March lows. And we nearly came all the way back to get the recent highs, and we're almost to a gap fill point as well. So this one, while it may not be ready right now, this one might be one that could be fadeable pretty soon off these highs. If it gets between 80 and 82, it may be a sell. How far does it go downward? You know, based on market structure down here, you got 66 to 64, and that's where it tends to go. It gets up here to 80 to 82, it drops back to 64. Gets up here to 80, 82, drops back to 64, and then some because of COVID. So if it gets up into this area, we may see a move back to 64 to 66. So this is one to consider. Again, in terms of timing right now, it may not be ready yet. Still a little bit more time left in the oven, but getting close. Another short candidate to consider is ORLY. And the reason I say O'Reilly, which may not be a good idea as well, because this is, you know, auto parts stores and things of that nature. The auto parts right now are on their highest highs. They've made a tremendous turnaround. But at times, again, when it gets too overdone, there's a tendency to get a snapback at some point. So this is one that is currently sitting above this high right there, and it's forming a range up here. You know, it's been in this little range. If it fails to hold that point there, 450, right, that's what will cause a pullback of some sort, likely to 390. But over here, you see this high right there? That high right there is very similar. Price got above that high right here, built a range, and then when it failed, it dropped back to the bottom of the range. Right now, we're again above that high right there and building this little range. If it fails 450, we may get a spot, a reversal back toward 390, maybe a little bit lower. But this is one, again, that's not quite ready. Not quite ready yet, but perhaps could be getting close. Another one in the auto parts group here is AZO. Oh, data's flowing now on all my platforms here. AZO is another one in that group. Again, this has been a tremendous mover. It's doubled from the lows here for all intents and purposes there. I guess not quite a double, but 600s all the way back to 1250s. And we finally made it all the way back to that high right there, right? Well, I guess you need one more day or so to get there. And again, whenever you do get that high, what's going to happen? Does it blow through it a little bit and hit 1300 and then form a tail and drop back below that high? I would say 1250 is going to be very important in this high. That if we get a rejection somewhere in this zone, we may be looking at a pullback that takes us back down to 1050. So in terms of market structure, I'm looking at this 1050 zone right here, and we had been trading up to 1200. The one time we got up above that range, we fell back to 1050. We're here above that range again. If it fails to hold 1200, then we go back to 1050 again, right? So again, this is another one that might not be quite ready just yet, and it has earnings coming up, but it may be getting there soon. Another one in the auto parts industry group is, actually no, I didn't do that one. This is Ollie. So this is a bargain shopping right here. Here it is. The recent high here, again, very similar to what we're talking about with these others. It's going to be very important. First, you had that high right there, and then when price fails to hold here, all the way back, right? And it dropped all the way down to this level right there, 60 bucks. Now, this is the high right there, and look at the higher high failure. It gave way last week, and now we're back below it. So this one's already dropped a bit, but where it gets interesting is if it can't get back above the 103, 105 area. Because if it comes up here and starts forming a lower low after a higher high failure, that's when we might start to see this move take place. We come back to the 200-day or perhaps back to the bottom of this range. So that could be a pretty big haircut for this one, considering it was nearly at 120, and if it did pull back to 60, that'd be nearly a 50% correction. I don't know if we get all the way back to that zone, but 100 right here, I think between 100 and 105, if it can't get back above that zone soon, we may be looking at a return back towards 75 and that 200-day average. So this is another one here that's looking like it may have found at least a near-term top. Now we got to see if the pullback into 100 provides some selling pressure. And the last one on the list here is Avid Bioservices, CDMO. You can see a theme with all these long-term sell candidates right now. This is your highs. Right here, it dropped hard away from that high back to 3.5. Here, it dropped hard again away from that level 3.5. It's a cheap stock here, but this is another one that if it can't hold $8, we may be due for another push back to value. So anytime it gets up here to 8.5, it pulls back to value. 8.5 pulls back to value. Here we are again. If it can't hold 8, perhaps we get that pullback again. But as I mentioned, with every one of these sell candidates, timing is going to be very important here, and we'll see when that may occur. The best catalyst here will be if the broader market begins that September pullback. These would probably catch a little steam to the downside. So that's one to watch right there as well. That's CDMO, and it's looking really good on a weekly chart as well. There's 2 days left in the weekly bar for it to finish. But from a weekly chart perspective, after today's rejection, we got a really good developing, and I say developing, signal up here because we still have 2 more days for the signal to go away, but you can clearly see the rejection that's coming in play up here with a midpoint of that signal there. So on a weekly chart basis, we'll keep an eye on this one the rest of the week here. If that signal sticks, again, it could be an early sign of a short-term top or at least some sort of pullback to come. So that's the list for the September market outlook here for 2020. A lot of great stocks on the list there. We looked at Tdoc and Lvgo. We also have Yeti as a good one that can continue higher. VMW is a really good compression candidate. Draftkings, right? APPS, a lot of good candidates there. And then also on the short side, really liking some of these like AZO and Ali that could provide some good pullbacks here down the road if the market gets that September pullback. So I want to thank everyone for joining me here today for the September monthly market outlook. Again, always my pleasure, and always wishing you the best in the market. Please join me at pivotboss.ecofin.com if you want to jump into the trading room there and join a group of very experienced traders. We have a lot of fun in there, especially when the market's active. A lot of great viewpoints in there and a lot of good traders. And again, we have some great content that also comes with the premium trading room, including our 10-part executive training series. We also have the 5-part signature setup series, and that is all included with your subscription to the trading room. So please feel free to jump into the trading room and say hi. Again, always thank you so much for all of your support from around the world. Always warms my heart. Everyone have a fantastic evening, and I'll have this recording out to you as soon as possible. Take care, and I'll see you in the trading room.